This is Uranium Spotlight on Tuesday, October 1st, 2024. Brought to you by Pure Point Uranium Group, your exploration partner in Canada's Athabasca Basin. Amidst surging uranium demand, Pure Point's continuous 2024 exploration across their vast portfolio, backed by industry giants, underscores their focus on the next major discovery. And now your host, Chris Frostad.
This week on Uranium Spotlight, Kazakhstan gives the world a supply warning. Russian uranium attempts to find its way into the U.S. through China, and the DOE offers up big goals but ignores the fuel to get there. Last week, the uranium spot price delivered a lift of $2.75, closing the week at $82 per pound U3O8, while September's long-term price closed out the month up $1 at $81 a pound. Yesterday, Sprott Asset Management provided an update on the uranium market, concluding that uranium markets were shaking off their summer doldrums. They stated the uranium market has seen a short-term pullback due to macroeconomic concerns, geopolitical instability, and political uncertainties in the U.S. Despite these setbacks, uranium's long-term fundamentals remain robust, with rising supply risks in Kazakhstan, Niger, and Russia driving a potential squeeze. Recent production cuts from Kazakhstan and uncertainty regarding Russian exports have heightened supply concerns, while U.S. sanctions on Russian-enriched uranium complicate utility contracting. While utilities have slowed their contracting due to high prices and sanction complications, this is likely temporary. Contracting will eventually pick up, driven by declining inventories and growing supply risks. Despite recent price corrections, the uranium term price continues to rise, creating a contango market, often a positive signal for future price support. For investors, the current dip may be an attractive entry point. The uranium spot price has risen significantly over the past 5 years, and miners are poised for a rebound as supply uncertainties grow. With a global supply deficit and little new supply expected in the short term, uranium prices have room to move higher. This environment suggests that contracting activity will intensify, supporting both prices and miners as we move forward. Kazakhstan's Chief Strategy and International Development Officer spoke at the Tripling Nuclear Energy Forum this week, emphasizing that Kazakhstan will remain a reliable uranium supplier globally, serving a diverse set of countries. However, he also pointed out a crucial gap. By the middle of the next decade, the world will need another supplier as large as Kazakhstan to meet rising demand. As the world's largest supplier of uranium concentrate, Kazakhstan's capacity is significant, but it won't be enough alone to fuel the ambitious plans for nuclear growth. Last week, we covered the major announcement that 14 large banks are committing to support nuclear energy development, aligning with the goal to triple global nuclear capacity. Kazakhstan's recent press release highlighted that. With increased government support, these banks are now joining a growing coalition backing nuclear energy and the Net Zero Nuclear Initiative. But here's the real question. Will these banks extend their support to fund the uranium supply chain that powers these reactors? Or will we continue seeing a widening gap between demand for uranium concentrate and the capacity to supply it? The Net Zero Nuclear Initiative aims to at least triple nuclear energy worldwide by 2050. But it's not just about reactors. Tripling uranium concentrate production, as well as increasing conversion, enrichment, and fuel fabrication, will be critical to support this growth. Building more reactors is only part of the equation. Without securing a steady fuel supply, the West could find itself in a tough spot. Kazakhstan claims it will maintain global supply with a diverse client base, potentially easing some Western concerns about fuel shortages. However, the terms of Kazakhstan's recent long-term contracts tell a different story. While their reassurances are loud and clear, most of these contracts have been signed with Russia and China. This leaves Western countries more reliant on smaller producers, particularly in Canada and Australia, to secure their uranium needs. The gap in supply diversification is a concern that cannot be ignored, especially if nuclear ambitions are to be realized. The U.S. has imposed new tariffs on uranium imports from China. China typically doesn't export much uranium. Most of their production is used for their own reactors. However, they've recently started exporting small amounts of low-enriched uranium to the U.S. The details, like who the seller was or the exact quantities, haven't been disclosed, but it's known to be around 200,000 pounds or less. The U.S. government suspects this uptick might be due to uranium coming from Russia, transiting through China to bypass the U.S. ban on Russian uranium imports, which took effect in May. While limited waivers are allowed until January 1st, 2028, after that, all Russian uranium sales to the U.S. will be fully banned. To counter this potential loophole, the U.S. has increased the tariff from 7.5% to 25%, likely aiming to make this kind of deal less profitable. The assumption that a Chinese intermediary is involved and the higher tariff is designed to make such arrangements economically unsustainable. Even though one reason given for raising this tariff is increased U.S. uranium production, the domestic supply remains minimal, expected to reach about 400,000 pounds this year. That's an improvement, but still less than 1% of the U.S.'s annual uranium demand of over 51 million pounds. This move by the U.S. echoes broader trends we're seeing, like Kazakhstan's recent focus on signing long-term contracts with Russia and China, which points to a growing split in the uranium market, one price for the East and another for the West. If Rosatom, the Russian state-owned nuclear company, and a Chinese partner did try to sell uranium to the U.S. and were swiftly blocked, it sends a clear message. Russia is determined to sell to the U.S. the largest nuclear fleet in the world because it's profitable. In 2023 alone, Rosatom supplied 12% of the uranium concentrate for the U.S. and a significant portion of it finished nuclear fuel. Meanwhile, the U.S. is equally determined to prevent such imports. This cat-and-mouse game between the U.S. and Russia is almost guaranteed to lead to higher uranium prices. If Russia tries to export its uranium through another country, the U.S. will respond in kind. For example, if a shipment of Russian uranium is mixed in with Kazakh uranium, and the U.S. found out, it could lead to further complications, especially since Kazakhstan is part of the CSTO, a Russian-led alliance comparable to NATO. The end result? More division in the uranium supply chain and likely a continuation of price increases on both sides of the market. The U.S. Department of Energy recently released a report on the state of nuclear energy, highlighting 5 major points. 1. By 2050, the U.S. will need 7 to 9 times more clean, firm electricity than all of its current nuclear reactors produce. 2. The U.S., along with other countries, aims to triple global nuclear capacity by 2050. 3. After learning valuable lessons from building Units 3 and 4 at Plant Vogtle, the U.S. is now positioned to construct new reactors more efficiently. 4. Consortiums could play a crucial role in helping utilities finance and build reactors on time and within budget. And 5. Nuclear power is a perfect partner for renewable energy, offering consistent, round-the-clock power. What the report doesn't address, though, is how we're going to fuel all of these reactors. That's the real issue. Current uranium production simply isn't enough. Last week, Fission Uranium provided an update on their acquisition by Paladin Energy Limited. The hearing for the final order approving Fission Uranium Corp's previously announced plan of arrangement before the Supreme Court of British Columbia was completed last Thursday on September 26, 2024. CGN Mining Company Limited, a subsidiary of China General Nuclear Power Corp., opposed the final order and approval of the arrangement. The court's decision in respect to the final order is expected in the coming weeks. The arrangement remains subject to receipt of the final order and clearance under the Investment Canada Act, as well as other customary conditions. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with some of the largest uranium suppliers worldwide. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.